Okay, this tutorial we're going to look at simple examples of how our benefits are calculated if we're eligible for state benefits. So I've got the setup here that I use for the fees calculation. And first of all, I'm just going to withdraw from the pension scheme, as we probably can't afford to stay in that. And if you look at display as income, I've got a net income of £22,762 a year, paying a rent of £550 a month. If I select on pay rise there to look at what my gross pay is, the gross pay is £30,000 a year. And what I'm going to do now, you'll also see here that I'm not receiving any benefits. So I'm going to see what happens if I reduce that pay down to £10,000 a year. I do that, my net income is now reduced to £8,401 a year, obviously paying a lot less tax, but I'm also getting £2,378 in benefits, and that is the housing allowance in respect of this rent we're paying here. Now if I just want to double check that, I can step forward a couple of weeks and actually look at what's going into the current account. So if I show the bank statement, and here I can see housing allowance £45.58 for a week, £45.58 for a week there. So I can see that's how I'm receiving that housing benefit. If I want to see how that varies as my income changes, again I can reduce my income to £9,000 say, and the benefit increases to £3,028 per year. Now have a look at what happens if I buy a house and therefore don't have to pay this rent anymore. I can select on property here. I'm going to select buy your first home. Obviously I'm not going to be able to afford a very expensive home with an income of £9,000 a year, but say I buy a property for £30,000 and take out a mortgage, and we'll also take out a loan for £30,000 as well with a repayment period of 25 years. Select OK, and this mortgage of £30,000 for 25 years will cost a premium of £2,373 per year. So I'm going to say yes, go ahead and process now, and we're going to pay the full price for it. The relevance of whether it's a gift is for capital gains tax with other items, so we'd always just select full price there. And it reminds me, make sure you delete rent from your spending list if appropriate. So it is going to be appropriate in this case. At the moment you'll see we're still getting benefits of £3,000 a year. We've got a mortgage repayment of £2,373 a year, but I'm going to delete this rent here as that's no longer appropriate. So remove spending item, and then I refresh there. I can see the benefits gone down to zero because I'm not getting housing benefit in respect of mortgage repayments when I own my own home. And you'll also notice on the asset pane here, not only have I got the mortgage there, which has a payment of £2,373 per year, I've also got home here, and if I select display as value, you can see the value of that house is £30,000. Value of the mortgage is negative £30,000. Now what I'm going to do so as to show other things we can look at and other benefits we can get, I'm going to take out some of these expenses. And try and reduce the overall expenditure down to something sensible. Summer holiday costs £400 there. So I've reduced it to something sensible. I'm going to give myself a bit of a pay rise as well. Otherwise, life's very difficult. So having given myself that bit of a pay rise, what I'm going to do now is add in a wife first of all, and then some children, and see how that affects my benefits. So to add in a wife, I've got to add a new person, and we'll call this Mrs. Freddie, date of birth 1987, female. We're not going to include any NI cons at the moment, not currently drawing state pension. Claims benefits, not the householder for housing claims, because that's going to be me as the main person that I'm trying to do the calculations for. Not seeking work, and we're going to leave that auto person blank as well. So select OK there, and here we have a wife added to the scene. Now to make the two of us married, I just need to add new relationship, and it's going to be a spouse relationship, so it's Freddie is married to Mrs. Freddie. OK, and you can see there we have the new person in the system. Now that's not changed the benefits at the moment, but what will change the benefits if we have a baby, and there we can see new baby added into the system, and suddenly we've got benefits of £6,729 a year. So if I step forward a few weeks and look at my bank account, I can see a number of new items added on. It's automatically added on some child costs here, which obviously I can edit if they're not exactly as I would be spending myself. But you can see here, child benefit £20, 23 a week, child tax credit £67, 72, working tax credit £45 and 1p. So you can see the benefits have been added in there, and obviously it's quite a considerable value at £6,729 a year. Now these benefits will decrease as I get paid more money, because they are largely means tested, apart from the child benefit itself, which is only means tested for people on over the basic rate tax threshold. So if I give myself a pay rise, I can see how, say to 15,000, I can see how those benefits then come down from over 6,000 to 5,500. And if I step forward a bit and have a look at the bank statement again, I can see what's happened to these benefits. So child benefit has stayed the same, it's not means tested. Child tax credit has come down a bit, and working tax credit has come down a bit. So I can see how those different benefits work. If I, for example, give myself a huge pay rise to £30,000, then I can see the benefits come down very considerably, but there's still some value in those benefits there. So you can get an idea now of how benefits are calculated. The other important aspect of benefits is looking at state pension benefits. So I've added in a grandparent here, and if we look at edit personal details, we can see how we can enter in these various details. Now if you don't know how many years of national insurance contributions you made, or how much your different band earnings are, you can estimate them here. If you just select the estimate button and enter notional salary to calculate the band earnings. So I'm going to put in a salary of, let's say, £23,000, and enter that, and that then calculates how much of the different band earnings it's expecting this grandparent to have. And you'll notice he's 70 years old, so vast majority of his earnings is under SERPs rather than state second pension. And I can also do the same with actually estimating what the actual basic state pension is, the SERPs pension and the S2P. So I just select there, and that's estimating I'll get £102 a week of basic state pension, 33 of SERPs, and £8.83 of state second pension. So select OK, and you can see the state pension is now being calculated at £8,453. If I step forward a couple of weeks and look at my bank account and see what's actually in that, so I can see state pension £144 a week. That's including state second pension and the and SERPs. But I'm also getting a bit of an addition of savings credit, which is the means tested aspect of the pensions credit. So I'm getting a total pension of £162 a week, as you can see there, which is £8,453 a year. Now, supposing you wanted to understand how the pensions credit worked a bit better, we can go back in here and change a lot of these values. So if I select estimate again there and put a lower notional salary in, you can see I reduce a lot of these values. But let's in this case assume that he's always been contracted out, so he doesn't have these various aspects of pension, and supposing he's only actually got 20 years of national insurance contributions, Now if I calculate the state pension, you'll see there's no CERTS pension or STP as we'd expect, because we've not contributed to those, and the basic state pension is now £68 a week. So if I select OK again there, now you notice my total state pension has gone down, but it's not actually gone down that much. So if I step forward a couple of weeks and look at my bank account, I can now see what's actually been happening. So now, in fact, I'm going to step forward another couple of weeks. So everything's just come through. So now what I can see is I'm getting a state pension of, it's actually gone up to £70.85 because we've gone over the tax year there, but I'm also getting a guarantee credit of £71.89. So although my state pension's gone down quite a lot, my means tested benefits are going up to offset that. You'll notice before we had a savings credit, because we had quite a decent state pension, we had a savings credit part of the pensions credit. That was to give us a bit of extra money to reward us for having actually got some savings, so that we didn't get all of our savings means tested away. But as we've reduced our pension, you can see that the guarantee credit, which is to make sure you get a minimum level to live off in retirement, has kicked in, and so the total level we get to live off in retirement hasn't been reduced much by actually reducing the amount of state pension we've accrued. It's worth mentioning that this system is very likely going to change for a non-means tested fixed amount of basic state pension in the near future. So obviously the model will be updated to reflect that when that change occurs, but for people actually drawing a pension at the moment, this is how it would work, and you can see how the different strands of the pension are calculated.